the energy support scheme has kept the UK out of recession. Friday, February 10th, 2023, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at how the UK has avoided recession, only thanks to deficit spending. Yes, thanks to the government. Government, of course, wants to make things look like they're a lot better, of course, because they want to get re-elected always. That seems to be the problem. Before I start, I'd like to actually thank all of you again for being interested in the channel. I would like to thank all the new subscribers, and I'd like to reiterate that you need to hit the little notification bell to be notified of all my new videos. I make a video every day, and recently a lot of people have been telling me that they don't get notified of my new videos. Even my wife, she said she wasn't getting notified. And make sure you hit the like button if you enjoy my the particular video. I'm not saying you should automatically. And make sure you subscribe as well. With that, let's move into the UK economy. And why are we talking about this today? Well, because it's all in the headlines that the UK has avoided a recession, not just in the Telegraph, but also in the FT. UK economy dodges recession, but stagnates towards end of 2022. So these economic data used to come out at 9:30 a.m. London time, but now they, ever since the pandemic, they're publishing it early in the morning at 7 o'clock. That's another factor that we need to look at. Why have they changed the timing? Well, because 9:30 is smack in the middle of when the markets are trading. Right now, it's still really early. So I think it gives the people at the Bank of England, the Treasury, and the big banks an opportunity to kind of tweak things. If things get, how can I say, the market's very volatile, they can go in there pre-market. And that's why I think they're doing it, and they've continued to do it. It just doesn't make sense to me. Having worked in the markets for many years, why change the time? So before I look or tell you how they've really put lipstick on a pig, really, because the UK economy in 2022, and by economy I mean you and me, the people in the private sector who create real wealth. And I'm not denigrating the people in the public sector, but the people in the public sector, they actually don't pay tax technically, because they're funded by our taxes. And the people in the public sector, yes, they've got, where they get the money from? Well, from our taxes. And who does that? Who collects the taxes? Governments. So the bigger the public sector gets, the smaller the private sector gets, the less wealth the economy creates, the less pool of taxation the government can get. And that's why our economy is stagnating, because government spending is over 50% of GDP. But let's quickly look at what the numbers were here. And as we know, the Keynesians define a recession as 2 consecutive quarters of negative growth. Of course, in the US, we had that in the first 2 quarters of 2022, but for some reason, they, Keynesians and the mainstream economists and politicians, they like to change the rules. But anyway, the US was in a recession earlier in 2022. The UK had a negative growth in the 3rd quarter. And guess what the growth for the 4th quarter was? Well, it was 0. So I'm sure they tweaked a lot of data to make it not go into a recession. But we're going to look at why, in reality, it was a huge recession, not just for the third and fourth quarter, but for the whole year of 2022. They're telling us as well that for 2022, the economy grew by 0.4%. So how do we find out what the real number is, the real private sector number, the real wealth? How much did the real wealth of the economy grow? Because the Keynesians, all they care about is the money amount, and they don't care if it comes from government or whatever. They just count it and they say, oh, look, that's the economy. But I would say most of you who watch me would agree that you can't have an economy where the government produces everything, because government doesn't produce anything. And if you think government can create value, then I'm sorry, you're on the wrong channel. But anyway, here's the equation calculation for GDP, and I took this from ukindeed.com. What is the real gross domestic product formula? So here we go. It's very simple. How to find the nominal GDP. So it's consumption, which is C, plus government spending. There you go, which is G. Nowadays, the Keynesians have kind of split the government spending into spending and investment. But do governments really invest wisely? I don't think so. It's all spending. Because governments don't save, governments don't produce like we do. And we also add gross investment from the private sector and exports minus imports. So if you're running a trade deficit, that's going to weigh on the GDP. So, and why do I say they're putting lipstick on a pig and like really tinkering with the GDP number to make it look like it's better? Well, because if you look at government spending, the more the government spends, the better the GDP is, and especially when the government runs a deficit. So what kind of deficit has the UK government been running? Well, let's have a look here. This is from September 23rd, 2022. It says UK's NIESR sees budget deficit hitting 8% of GDP in 2022-2023. Yes, it's a little bit complicated because the GDP is calculated for the calendar year. The government accounts are calculated for the fiscal year from April to April. But I would venture to say that number for 2022 will be larger than 8%. And I'll come to that in a minute. So let's just quickly see here. Britain's budget deficit set to rise to 8% of gross domestic product during the current financial year. The National Institute of Economic and Social Research forecast Friday, following Finance Minister Kwasi Kwarteng's mini budget. So you might think, oh, they got rid of Kwasi Kwarteng, it's going to be a less than expected. Well, I made a video actually on the 24th of January, it was about 3 weeks ago, where I spoke about this, and I'll put it up in the cards. The record deficit for December will shrink pound in your pocket, right? I did that video, and I covered this article here, and it's from January 24th. It came out in the FT. UK public sector borrowing more than doubles in December. Energy support scheme drives up figures as ONS report shows, highest borrowing since monthly records began in 1993. So public sector borrowing hit 27.4 billion last month, up from a revised 10.7 billion in the same period in 2021. So just keep that in mind. And this morning I was going through trying to find this article, and I found another one, and it looks almost exactly like This previous one, it says, and this is from December 21st, 2022, UK public sector borrowing hits record November high. Energy support payments and higher debt interest pushes borrowing to 22 billion last month. So it's almost like a carbon copy of what happened in December. And strangely enough, what's keeping GDP positive? Well, the record government spending, the record deficits, to basically keep your utility bills lower. That's how they kept the UK from avoiding a recession. Isn't it ironic? It's crazy. That's how crazy this economy and this world is. And that's why we're seeing crazy things happen geopolitically. We're seeing the whole British establishment fawning at some guy from one of the most corrupt countries in Eastern Europe, giving this guy a red carpet and hero status. Well, it's all part of this crazy world. So there you go. The energy support scheme has kept the UK out of recession. It's weird because before I started this video, I hadn't twigged onto that. And just going through these articles shows me. So what do I think the real GDP growth was for 2022? Well, it's difficult to say, but I would say it was negative, big time negative, at least like 5%. There was a 5% drop, because if you hadn't added all the government spending, that equation would have given you a negative result. So just by the skin of its teeth, the UK Treasury avoided a recession. We got zero growth, which is not negative for the fourth quarter, even though we had record deficit spending in November and December, thanks to the energy scheme. So what does this all mean? I'm not here just to try to criticize and say, look, they're lying to you about this. They're not really being truthful about the economy. Well, hopefully it gives you an idea of how things really are underneath the bonnet, or the hood, as the Americans would call it, so that you can make better financial and economic decisions. It's not for me, of course, to tell you what to do. I don't know your circumstances, but yeah, that's how things are. And with that, let's quickly look at where the markets are this morning. It's 8:15 a.m. London time. So we've got spot gold at 1871. It's up just under $10. We're right near the highs. The low's been 52. The silver price is up 1.2%. Spot silver's at 22.24, up 26 cents. High's been, well, we are right near the highs here. The low's been 21.81. By the way, today I'm gonna go to Peter Morris Coins and Metal in Bromley North Station. I'm gonna look at some numismatic and maybe some silver coins or gold coins. I've got a little bit of extra fiat, so I'm gonna go to my local coin dealer or local coin shop. We don't have many of those in the UK, but I will be going there to see Mr. Morris. The Dow futures is up 29. The NASDAQ is unchanged virtually. The S&P is up only about 3 points. To the currencies, sterling is unchanged, 121.23. It has been below 121. It got down to 120.88. The euro is unchanged as well, 107.40. The dollar is down quite a lot, actually, versus the yen. It's down over 1%. It's testing 130. Let me just check here the JGB yield, because it could be related to that. Well, the JGB 10-year yield has been kept here, still below 50 basis points. But it's interesting, though, that the dollar is getting hit versus the yen. Maybe the FX market sees something in the JGB market. The dollar is unchanged versus the yuan. Let's quickly go to the other currencies. The Aussie dollar is up 0.25% at 69.50. The dollar is down slightly versus the Canadian dollar, 134.30, and the Kiwi dollar is up 0.25% at 63.41. Platinum. Platinum is unchanged, trading around 960. So platinum kind of, was looking good above 1,000, and now it's come back down. Maybe for those of you who like platinum, an opportunity to get some. I mean, I'm not involved in platinum, but just looking at the price action, it looks like a good place to buy. WTI crude, that's down 0.33%, just below 78. Brent is down 0.25 at 84.07, and high grade copper is down 0.75%, around 4.08. Now to the bond market. We've checked the JGB, so the JGB is stable right now. The 10-year yield, U.S. Treasury yield, is down about 1.5 basis points at 3.67. And now to the UK. Let's see what the UK bond market is doing, because I think things are starting to look shaky again for the gilt market. So here we go. We got the 2-year up 5 basis points at 3.55. And don't forget, the 2-year is the rate they use to set mortgage rates. So that's been rising quite a bit in the last few weeks. The 10-year yield is up 7.5 basis points, and it's at 3.36. And the 30-year is approaching 4%. I know it's still only at 3.82, but it's up another 8 basis points. So I think we need to keep an eye on the gilt market again. I know the Bank of England kind of salvaged it temporarily back in September, October time with their not QE, but I think they're going to have some trouble ahead, because as you can see, the real economy in the UK is unfortunately in really bad shape, and that's what worries me about all this geopolitical grandstanding that the UK is doing vis-a-vis the Ukraine. Because as Gerald Celente said, when everything fails, they take you to war. So hopefully I'm wrong about that. So with that, I'm going to wish you all a great day, a great weekend. Take care. Bye.